Good Thursday morning to you, everyone. This is Scott G with the Simple Trading Life. We're here with another edition of our daily live stream, or almost daily, I should say. Got some nice movement in action in the S&P 500 E-minis this morning. That's what we're looking at first. And then we'll go and take a look at potential micro scalps or even just day trades in the forex market here shortly. And as always, if there's anything you want me to look at, I'll be able to do that for you as well. So we'll get started here, and let me bring your comments up. This also tells me who's in the room. We've got several people in here already. So good morning to you all. If you're new, make sure you give us a thumbs up, subscribe to the channel, and turn on that notifications bell. If you've been here before, thank you so much for rejoining. So let's just jump right into it. We've got several people in the room already, on the channel, excuse me. So we have ES here, and if you go back to this candle, this is the 8:30 candle, and that is where the GDP and jobless claims numbers came out this morning at 8:30. And really for about 10 or 15 minutes, we had very little movement based on the numbers. The numbers were, I mean, they're bad, but you know, some people might say they were slightly better than what they thought they might be, but they were still bad. And after about 10 or 15 minutes, finally, the market started to move down. We had a little bit of profit taking right here. And then here was our opening candle of the regular trading hour session. Just a little pop to the upside, always, as we always talk about. That's basically to fool retail traders of the actual direction they want to take it. If you watch and pay attention, the initial move each morning, about, I'd say 75 to 85% of the time, they end up, maybe even closer to 90%. After this initial move, whatever direction it is, they usually take the market the other direction, unless there's whipsaw. If there's whipsaw, they're going to go both directions. This morning, this is what I would call a delayed reaction. So a lot of times, I mean, that's negative right there. Let's see, this candle was I think it was about a $17. Yep, $17 candle. And then this candle here was a approximately $25 candle. So $17 here, about a $25 candle here. This was just some profit taking from this initial move down. Then we came down right to our 3201.75 level. Then it dropped even lower to our 3195 level. Currently catching just a little bit of a bounce. Let's take a look at some other things, right? Our trend is to the downside. Our moving averages are widening, right? They're widening. The 10 is below the 20 and the 20 is below the 30. The only thing is we're starting to get kind of far away from the 10, so sometimes you'll see a little bit of a pullback to it, and then it might try to go lower. Momentum is obviously to the downside. Let's see if I can draw this in for you. Okay, so our longer term, remember these are 30-minute candles, so every 2 is an hour. So going back to yesterday, right? Going clear back to when we started the overnight session, we've been steadily moving down, right? So last night we were steadily moving down. This is the opening candle this morning. We get the negative numbers. We're moving down again. So what we'll watch for is maybe around 10:30 or 11, do we start to see a reversal, right? Where price tries to make a move back to the upside, or do we continue the trend to the downside? Now let's look at some levels slightly below. Okay, so if we would start to go down again and break and hold this level, the next level down is 3182. That would be a support level. And then underneath of that, give me 1 second, it's 3159, but we also have this trend line here. And where does that trend line come from? Well, let me show you. Let me squeeze this back in. Okay, So we had 1, 2, 3, 4 touches, right? That created this downward trend line. So should price continue to fall, if it gets here, we would watch to see, do we get a reaction? Okay, because on 1, 2, 3, 4 occasions when we got to it, we turned around and we bounced and we went higher, right? And you can also see that this range is starting to expand. So if I took and it went something like this, right off of the top of there. Let me get that drawn in for you. And then we'll extend that to the right. Okay, as you can see, the range is actually starting to expand. So we look for what? Contracting and expanding ranges. This is an expanding range. This is a contracting range. So right now, we're in an expanding range. When price gets down here, again, we would look to see, now that's if it makes it all the way. Like here, you see this? Again, nothing magical about this line. I want everybody to understand that. There's nothing magical about this line. This actually was an expansion of the range because it's lower than the low of this. If I draw my cursor across there, we actually did put in another low here. Okay, but this was higher than this. That tells us we're expanding. This was higher than this. That tells us we're expanding, right? Now here, we're actually already lower than this, so we're still expanding the range. Whether it reverses here and starts back up or comes all the way down here, we're still expanding the range. Because if I come here, you look straight across, right? It bounced off of this line. This line is lower, right, than here. So that tells us that the range is still expanding. Okay, now this could just be some more profit taking, or this could be a bounce here where it's starting to reverse higher. And we'll have to pay attention and see what we get there. All right, let me bring this back out so it makes it easier for you to see. I just wanted to show you where that bottom trend line was coming from. Okay, so that's where we're at on ES currently, and let me also stretch this back out. Makes it easier for you guys to see. All right, so that's where we're coming from. I see we're getting a bunch more people joining us. Welcome. We're still covering ES before we flip over and start looking at forex to see if there's any micro scalps we might want to take this morning, or even just day trades, right? So I was chatting with somebody last night and they were saying, does your strategy only work on micro scalps? Absolutely not, right? This wouldn't be micro scalps. And as you can see, okay, right here, actually right there, okay, right there, the 10 and the 20 got below the 30 and we're starting to widen. If we pull over, you'll see there was a level of structure right here that we were also getting below, okay, about the same exact time. So you could have entered a trade right about here, okay, because you're breaking this level of structure, and took it down to even say this level right here, right? You wouldn't have had to ride it all the way down. And if we come over, see, here's another level of structure right there. So you could have entered, let me see here, right underneath these bodies. So look across, 32, just say 32.35. It'll make the math easy. And you could have looked to take an exit at this level or slightly above. 31.2150 would have been the tick right above this. 31.2150, and then where did we say up here? Where's the low of this? 32.35. So that would have been a $14 move, right? A $14 move. That's just a scalp or a day trade. That's not a micro scalp. So yes, in fact, this strategy, the 10, 20, 30 is for scalps and day trades primarily. You can also use it for shorter term swings, okay? But when you start to move out to, hey, I'm going to trade more than 3 days, I would then go to 20, 40, 60. And if you're somebody who likes to trade for weeks or even months, I would go to 50, 100, 150. So this is the EMA 3. That's what I'm calling it for now. Equal, it's the equal EMA trend trading strategy. So as you guys know, we'll go over the kind of the rules again. I posted them in my room yesterday several times because everybody was like, oh my gosh, you know, these micro scalps are awesome. Will it work on other time frames? Will it work, you know, is it just for micro scalps? What are the rules? So I posted the rules several times. So they're in our room. Go to simpletradinglife.com and click on that free chat room button. You can join us. They're in the main chat, but I'm actually going to create a little bit more content on this and then put it in the lessons channel. That might go in today. It might go in tomorrow, whenever I can find a little bit of extra time to do it. So anyway, but just some of the basics. What is the trend? That's number one. Is the trend up, up, down, or sideways? Okay, we're not interested in sideways. We want either up or down. Okay, so if it's down, that's like factor number one. Okay, factor number two is price below the trend. So it needs to be below the 10. Okay, if it is, that's another good check for us. What is momentum doing? Is momentum up, down, or sideways? Well, obviously here it was down, right? So again, we're talking about this could have been a trade for somebody right here. Momentum is down. Is the 10 below the 20 and the 20 below the 30? Yes. Okay. Now on here, I do not have my relative volume. This is on Thinkorswim. When we flip over to TrendSpider, you're going to see I have it on there. So is your relative volume above average or below average? We want it to be above average. I was showing last night in the room, there was a couple of trades that I took that they worked out, but the only factor that I didn't have out of about 6 factors was I didn't have above average volume. And it was because of the time of day, right? The Australasian market hadn't opened yet. I think they open around 7 p.m. And when you have below average volume and everything else, just say everything else is in your favor. When you have below average volume, there's just no, I called it oomph. There's nothing to really drive that price. So it just sort of trickles. And in 2 different trades where I didn't have it, I never made it to my take profit target, which was either 3 to 1 or 4 to 1 or whatever it was at the time. But I did make it over 2 to 1. Right? So as I trailed my stop up, when it kind of came back and stopped me out, I still got 2 to 1, right? Which is still good, right? 2 to 1, some people just shoot for 2 to 1. I prefer 3 to 1, but 2 to 1 is fine as well. Okay? So anyway, as we can see right here, let's see, we got about 15 minutes to go on this 30-minute candle. It's whipsawed a little bit, and now it's sort of settling in right here. What we'll do is we'll set some alerts, and then we'll go start looking at some forex stuff, and we'll look at a couple of different things. But we'll set some alerts so we know if price starts to move up or down. So that one is if it takes off to the upside. And let's get one just below here if it starts to move to the downside. And then that'll free us up to go look at some other things. Okay, so there's our 2 alerts. And we'll wait to see if price starts to move up or down. So let's move over to TrendSpider. Okay, and let's take a look. Now, again, the question that came up yesterday, some people DM me, and I think maybe even a person or two asked in the room, is this strategy good for, you know, just normal day trades or normal, you know, scalps, or is it only micro scalping? It's actually a scalping and day trading strategy. That's where it comes from. So absolutely. So we can, you could trade on the 15. You could trade on the 5. Let me go to the 5 minute. It'll load here in a second. Okay, you could trade on the 5 minute, 15, the 30, the 1 hour, whatever you want to trade on. Okay, and that's with the 10, the 20, and the 30 EMA. Okay, make sure you put your RSI with these settings. 14, which is standard, and then 60, 40. All right, and all this is a momentum indicator. I stress that every single time. And even though I stress it, I still get questions on almost a daily basis. Somebody will say, well, why aren't you doing this or why aren't you doing that? Because the RSI is oversold or it's overbought. And I have to just keep repeating myself, we do not use it for that. We do not use it for oversold or overbought. We use it for momentum. Okay, it's a very good momentum indicator. I do not like it as an oversold or overbought indicator, even though that's what it's designed for. And as you can see down here, here's my relative volume. The black line is the 50 period moving average. That's the last 50 candles. That's their average. This line will move, right? So if the last 50 candles there wasn't much volume, it's going to be lower. If there was a lot of volume, it's going to be higher, but it's the average. So when candles are above it, we know we have what? Above average volume. And that's one of the things that can really drive price, one direction or the other. All right, so we're going to look and we'll see if we can find anything. Now, one thing I also wanted to stress, if you're going to trade on a 5, a 15, a 30, a 1 hour, you're going to have a little bit bigger stops, typically, but you're also going to have a little bit wider price targets. Now, I'm not talking about moving your risk to reward. I'm just saying you may have, instead of having a 3 pip or 4 pip stop, you might have a 5, 6, 10 pip stop, and now you're looking for 20, 25, 30 pips instead of looking for something like 9, 10, 12, whatever the case may be. So just keep that in mind, right? So like here on the 5 minute, you see we got this big hammer right here. You see this? We're trending up, okay? So let's just go through some analysis here. This is the euro dollar trending up. Okay, now down here would have been an excellent trade, right? We weren't on here at that time. Let's look. What would have made it an excellent trade? And I would have looked at an entry right there. Okay, you see where my cursor is. Okay, because the 10, first of all, trend is up. Check, right? The 10 is above the 20 and the 30. Check. Okay, above average volume, right? Even if it's just slightly above average volume. Check. So we got all of that. Momentum to the upside. See this? I can even draw it. I try to give you guys as many visuals as I can. Okay. Okay, momentum to the upside. Check. Right? As we just keep going down through the list, everything keeps checking off. All right. Do we have any noticeable obstacles in our way? Okay, the only thing I would be looking at is this pivot right here, and that might even be where I would look for a take profit target. So this is how I would do it. I would draw in a rectangle right across here, like this. Let me see if I can get it where I want it. That's good enough. Okay, like that. Now, if this is my entry right here, I'll take my ruler. I'm going to take my ruler and I'm going to see what this is going to give me. All right, so up to here is 20 to 21 to get into here. 20 to 21 pips. Now you can see that this trade obviously worked out, but I'm going to show you how you would analyze it. So your entry right above here, see I moved it up a pip or two, about a pip, would give you about 20 to 21 pips to this next, because in real time, here, let's do it like this. Let me move it over. Move it over. All right. So in real time, this is what you're going to see. Let's see if I can scroll it in. This is what you're going to see in real time. You don't know what's coming, but you do know that this was a pivot, okay? A pivot, which is going to create a likely area of resistance. Remember, we're on the 5 minute right now. Monday we did the 1 minute. Tuesday we did the 2, yesterday we did the 3. So today let's look at the 5 minute. So we're on the 5 minute here, and we're looking for a potential trade. Okay, so here is how it was starting out. Now this is what you would have seen in real time. Are we above average? Yes. Is momentum moving to the upside? Yes. Is the 10 above, the red line is the 20, above the 20? Yes. Above the 30? Yes. Check. Are they starting to widen? Yes, okay, because see how they've been flat and now they're turning up and starting to move apart. Okay, so there's another check. do we have the potential based on where our stop would be? So if we're going to enter at the top of this wick, I would put my stops below these two candles right here. All right, so let's just look and see, because what am I looking for? You guys should know by now. I'm looking for 3 to 1. I am looking for 3 to 1. So let me see, where's the top of that? Right there. Okay, so that's 5. So I'd have a 5 pip stop. Okay, you guys see that? I would have a 5 pip stop. And what's my potential? 20 pips. Okay, all you gotta do is some simple math. Just to get 3 to 1, I only need 15. So yes, I have the potential to get at least 3 to 1 based on where I'm gonna put my stop. So all the factors, they're all in agreement right here. Every single one. So here, this would be an awesome trade that as soon as you take that out, that's why I moved that up about a pip above there. As soon as you take this out, you should be going in. And I'll show you, because we might find some live trades that we can take. Let me go over, because I do forex on a Wanda. That's how I pronounce it. Some people may call it Oanda or whatever. I call it a Wanda. Okay, so if I'm going to enter a trade, I'm not going to enter it right now, but I'm going to show you how you do it. Okay, I can go ahead and predetermine my take profit, so 15, and my stop, 5, and then if I submit that trade, boom, it's an OCO order, which means one cancels the other. So as soon as I submit that, I have a 5 pip stop. I would have a 15 pip take profit target. Now, if I know that next likely area of resistance is higher, either now, I could make this 20 right now if I want. That's a 4 to 1 risk to reward. Or what I could do is I could leave it at 15. I could submit it. And then if I think, you never move your stop, but if you do want to move your take profit because you see a likely area there, if price is moving up quickly, I can put my stop into profit and then I could move that target up to 20 if I think it's easily going to get there. All right, but before I ever enter the trade, I have my stop and a take profit, and then I could submit it. And we might get to take one. So I'm not looking to take a trade on this right now. I just wanted to show you how easy it is to do that. Okay, so now we come back over here. See, we got a few more people who have joined us. Welcome, everybody. Right now we're going over 5-minute scalps on Forex. Okay, using our equal EMA, for lack of a better terminology, we're calling it the EMA3 trend trading strategy. All right, so again, in real time, this is what we would have seen. So we would be saying, hey, I like this, and look at this here. I missed this, but I wouldn't want you guys to miss it. Okay, see that? That's also beautiful. If we're breaking this level here where we triple topped, 1, 2, now we're here for a third time. If we break through, that's another reason we should be looking to go long, right? That's just another one. That'd be a 7th reason. Okay, so now let's see what happened. Next candle, bam, right? We're already, if we were at 15, let's see. I'll use my ruler, come back over here, and whoop, way down here. Right there's 15, okay? On one candle, we would have already hit 3 to 1. Okay, I'll leave that there. Next candle, there we go. So in less than 10 minutes, you would have got 20 pips, 4 to 1, or if you were looking for 3 to 1, you would have got that in a matter of a minute or two, right? Because these are 5-minute candles. Okay, everybody see that? So now let's come back over. Let's see where we're at. All right, so we came back down. Right now we're still looking at Euro USD. And I want to show you something here, what frequently happens. We drag this across. Get it back up where it was, right about there. All right, so this was that level of structure that we expected to sort of act as some resistance. We shot right through it, we came back down, and then look what we did. We retested it. So what did we have right here? A break, retest, and go. A break, we broke through the level, we retested. Okay, we actually came all the way back down to here. Okay, but see where the closes are? They're right in that level of structure where the candle closes are, and then went. Break, retest, go. That's a frequent thing that happens when you break a level. Now, once you've broken through a level, what does that level typically become? If it was resistance, it typically becomes support. So we went up, now we've pulled back, and look, even though we came down here, where did the candle close? It closed above. This one closed and went above, came back, retested again, and it's closing above. Okay, so would we be looking for longs? Yes, because when do we look for longs? On pullbacks. Okay, when we start to get extended, we know it's likely we're going to pull back, right? When we start to get extended, look over here to the downside. We start to get extended, we pull back. We start to get extended, we pull back. We start to get extended, we pull back. You see that? Right? It works both directions. Now, because we know that this was resistance and now it seems to be acting as support, if price gets back above the 10 and we start to see this curl to the upside, and we would want to see momentum start to curl back to the upside, we'd want to see above average volume, and we would look for an area to enter, which to me would probably be just about there. Okay, if we could get back above there, but all the factors, or at least 5 out of the 6, need to go in your favor. Okay, they need to go in your favor. Let me see here. I might be able to show you. Let me go back through. I'll show you guys right here. All right. See this? This is where I was answering it for somebody. They said they missed the rules. Okay, so here it is. For a short trade, for a long trade, it's exactly the opposite. But number one, which direction is the trend? We only want up or down. That's all we want. Okay. Number two, depending on which direction we're going, is price above the trend if you're looking for a long, or is it below the trend? If it's hung up, I call it tangled. If it's tangled up in the EMAs, then you're not interested. Okay. Is the 10 above or below the 20, and is it above or below the 30? So if you're going for a long trade, you want the 10, 20, 30. If you're going for a short trade, you want the 10, 20, 30. 10 below the 20, 20 below the 30. Okay, are the EMAs widening? Now, they don't already have to be wide. That's why it says widening. So if they're close together and they're doing this, and then all of a sudden they start to move to the upside and they start to do this, that's widening. Or same thing, if it's moving to the downside and they've been close together, right? And now they're moving down, but they start to widen as they move down. Okay? That's what we're talking about, as they start to widen. So if they are, there's another check for you. Is the momentum, we're talking about the RSI momentum, is it up or down? You want it in the same direction that you're going, or you want to see that it's just curled and changed. So let's say it was moving down, 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 but now everything else starts to move up. You want to see it curling in your direction. Okay, relatively strong. Okay, and then do you have above average relative volume? So let's go back over here. All right, so now we're not up there yet. This is what I would call tangled in the EMAs, right? Because where's price? It's mixed up in the EMAs. The EMAs currently, at the exact moment, are not showing direction. They're sideways, right? This is a trend to the upside. This is sideways, right? This is sideways. So if we're looking for a long trade, okay, and this is all hypothetical, but you're trying to anticipate, if this level keeps acting as support and eventually price comes up and breaks through here, and at the time it breaks through here, that's the key. At the time that it breaks through here, is it above the 10? Is the 10 above the 20 and the 30? Are the EMAs widening or continuing to remain apart? If they're already apart, that's great, right? Okay. Now down here, this is what I was talking about. See how they're all smashed together and they're just kind of you know, like ripples on water right here. We don't want any part of that. But here, you see how they had turned? And you see how they're starting to widen? That's why I was saying that this was such a great trade right there. That's why that was such a great trade. Okay, everything above average volume, all of it was in our favor. And when you have all 6 of those factors in your favor, these trades are highly, highly, highly likely to work out. And then when you're managing your trade, it's even better. And what I mean by that is then you move your stops up at predetermined times. You know, there's times when you'll get really, really close to like a take profit and then it starts to work back against you. But if you've moved your take profit, your stop up along the way, you're going to profit. It's just a matter of how much. You might not hit your take profit target, but you're still going to profit. And what do we say, right? You cannot go broke taking profit, right? Drill that into your head. You cannot go broke taking profit. All right, so we're seeing a little bit of a bounce here. You see this? Okay, so if it would break here, and it's above this, these start to turn up. They're still wide. We have above average volume, and this starts to curl up. Okay, I would want to see this start to curl up, right? Because we were trending up, and then we finally broke below, and we're moving down. Momentum was decreasing here. So we would want this to curl up. So this is what we're watching for. Again, today we're looking at the 5-minute. Okay, so these are more like a traditional scalp. Micro scalps are like 1 minute, 2 minute, 3 minute. The 5, the 10, the 15, the 30, which is like my favorite time frame. What we're looking at now, those would be more like traditional scalps. Okay, hey Rohan, I see you're in here. Man, we have a nice crew today. All right, we're gonna watch here, and we can come back. Let's see. Yeah. All right. I'm going to leave that there. We'll come back to this. Let's look at a couple other pairs. Let's go. We'll start this way. We always start the other way. So we're going to start with USD JPY. We're going to do our analysis. All right. So we always start by scrolling out to see some more data. And what are we doing? Okay, here's the lowest point. Here's where we're at now. Technically, we're trending up, but is it very smooth? No, we're getting a lot of chop, right? A lot of chop. So you got to keep that in mind. Okay, where are we at currently? Do we have any trend? No, right? Mark our X. If it helps you, you could do this on a piece of paper for each trade. Okay, I just do it in my mind, right? So there's an X. Remember, what's our rule? 3 strikes and you're out. Okay, because I'm probably not taking a trade if I even have 2. That's just me. I like to have at least 5 out of 6, if not 6 out of 6. But I know even at 4 out of 6, there's still a probability you're going to at least get 2 to 1. All right, but right here, okay, see how we're moving sideways? Everything's together. Do we have any momentum? Nope. Look at that. Momentum's flat. We are above average, okay, but we have no trend, right? We have no trend, so that was an X. We have no momentum. That's an X. We are above here. Is the 10 above, right? Nope, it's not. Okay, price is above, but look where the 10 is. The 10's below, so that's an X. So 3 strikes, it's out. You don't waste your time. You just go on to the next thing, right? I want you guys to understand you only want to take great trades. That's all you want to take. Okay, don't take an iffy trade. Don't take an iffy trade. All right, so now let's look. We're on dollar CAD. So let's scroll out. Bigger picture is definitely to the upside, right? The wider angle, definitely to the upside. Okay, where are we at currently? Trend up, yes. Price above trend, yes. Okay, we could be marking our checks. Now we are extended, so we're looking here for a pullback. We like to enter on pullbacks once the trend's already started. Okay, are we above average volume? Yes. Okay, is the trend up? Without a doubt, right? Without a doubt. In fact, it's even above 60. Even though it's curling back right now, you always want to come back a little bit. I'll draw this in for you. You know, come back behind it a little bit and see where you're at. Okay, so touch some of these peaks. All right, now if it starts coming back below here, then you got to be careful. But if it just comes back to the 10, and then we get some sort of a signal, right, that price is in reversing back up, that's our pullback. Okay, so right now we would be looking for a pullback. And am I missing anything? Yeah, the 10 is above the 20, is above the 30. There's a check. So really, we don't have any X's. If we get a pullback and then get some sort of a buy signal to go long, this would be a good trade, right? This would be a high probability trade. So then what do we want to do? While price is pulling back, we want to look and see, is there anywhere that we should be looking or be concerned about? Okay, coming back this way, coming back this way. Okay, here's where current price is, way up here. So I'm coming back in the past because I'm trying to determine, is there any obstacles we need to be worried about? Okay, I'm not. Okay, here we go. So here's current price. You see it? See this wick? So right now it's struggling with this wick. If it gets above this wick, let me pull it back a little bit more. Okay, if it gets above this wick, then we have these wicks right here. Let's see how much room we have between kind of where price is and these wicks. About 11 pips. Okay, could be enough, right? Depending on where our stop would be, could be enough to take a micro scalp or, excuse me, a small scalp. If it would clear these, you have a level here. All right, again, let's look. This is current price. This is the kind of analysis you want to do before you enter a trade. You don't want to enter a trade blindly. Okay, so if we got up to that level, that's 16 pips. That's definitely nice. Then if we got up here around this double top, we're up around 30 pips. Okay, so there's some potential depending on if it could break through these wicks here. Big wicks can be obstacles because they're showing either buying pressure or selling pressure. All right, to make it easy to get back to it, this will take me right back to where current price is. All right, so we know if we get some sort of a bounce down here and start back up the other way, that we've got about 10 or 11 pips to play with. So what we would have to do is determine, okay, can we get away with about a 3 pip stop? Because if you can't, then you're not really getting, I'm taking my rules right now, you can't really get the risk to reward that you want. I hope that makes sense to everybody. So that's why I looked. I looked to see where those obstacles are. That first obstacle might give me 10 or 11 pips. So for me, hang on one second, guys. That's my middle son. Let me just text him real quick. There we go. All right. For me, if I'm looking for 3 to 1, if my stop needs to be any more than say about 3.5 pips, then I can't realistically say that I have a chance to get my 3 to 1. Now, if you're a 2 to 1 trader, then you might be able to achieve that. Hang on just a second, guys. My son is asking a question. Let me just answer him real quick. Okay, sorry about that, everybody. Let me get back. There we go. All right. Okay, so see, we're getting a bounce here. We're getting a bounce. Now, let's see. This candle has a couple minutes to go. We're getting a pretty good bounce here. Let's bring this over. Okay, maybe I'm going to put a line right here. Okay, I don't know that this is one that I want to take because of those obstacles, but I do want to watch this. I want to watch and see how it plays out. Okay, so an entry could be right here across, if it breaks across the top of these bodies, right? What are we on again? US CAD. US CAD. Come over here. And let me see, I got to go to the 5 minute. Trying to make this chart be like the other chart. So this would be my trading platform here. Okay, so if we broke above here, right? If we broke above there, let me put a line like I did on the other chart. Okay, right above there. Get that out of the way, and then let me bring it down just a bit. That way we can see it. I can scroll in. So we got to go so far back to find those where those other wicks were. But that doesn't mean you don't ignore them, though. You do not ignore them. So let's come back out. All right, we're almost there, as you can see. Let's see what we got. We got a little less than a minute left on this candle. You see how we got right up to it? That's why I say I'd probably look if somebody's interested in this trade. Now, again, because of those wicks, I'd be a little bit leery because I really would not think that I have great odds of getting 3 to 1. But, okay, so, and then let's start determining right now because your stop would want to go below this candle. So, let's see. You would be right below here. And then you've got to come up to here. What is that? Is that 14? 14 pips? Yeah. Okay, so not what I would be looking for. Not what I would be looking for. That's too big of a stop for me. And why am I saying that it really should be there? Okay, because look, we came down and we might be pivoting there. Okay, so the pivot is where I would want my stop to be. Because this could come up, and let's just say, like here, right? We poke above and then it comes back. And we poke above and it comes back. And we poke above and it kind of does this, and then it takes off, right? If you put your stop right here, you're probably going to get stopped out. But by the same token, that's too much for me. So that's 34, 38, and up here is 34, 52. So yeah, so that's about 12 from the bottom, and I was saying to go below it. That's why I got 14. 14 pips, that's too big of a stop for me for this trade. All right, so let's move on. Okay, let's move on. Looking at it again. Yep, that's exactly what it is. All right, so that's just too much for me. So let's go to the next one, which is New Zealand US dollar. What do? We take a wider look. Remember, today we're looking at the 5 minute. Okay, we've been in a downtrend, and then what were we doing? Look at this. We were in a contracting range. You see this? Let me draw it in so your eyes are drawn to it. Okay, this is a contracting range. Don't have to be exact right now. I just want you to see that. See how it went back and forth and got smaller and smaller and smaller, and then boom, we get the big breakout. Right? That's why it's important. I told you way back at the beginning of today's live stream That's why I love to identify either expanding or contracting ranges, because they tell you something's about to happen. An expanding range will also give you a good idea of magnitude of a move. A contracting range is telling you that energy is building, right? Like, so look here. See, these were wide apart and we were trending down. Then we started going sideways, and look, they kept getting tighter and tighter and tighter. You see this? See how they went from wider over here to completely flat? And then look at our range. Up, down, up, down, up, down, up, down, up, down. Closer, 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 energy building, and then it releases, and we get this big move up. Let's see what we had here. Okay, so when we broke out up to here, was just over 20 pips, and it happened in about, just eyeballing it, about a half an hour or so. Okay, it went right up to about this level. It actually got a little bit above there, and then it came back and dropped back down. But that's why identifying contracting or expanding ranges is important. Okay, when you see this occurring, okay, and you should probably start to pick it up about that third or fourth touch. So there's 1, 2, 3. Okay, you should already be picking it up because you have 2 touches on the bottom here. You have 2 touches on the top here. Definitely by here you should be picking it up, right? And you draw it in, and then you just wait for that strong move. And when you get that strong move, like here, you could have caught about 20 pips. Or if you're a 3-to-1 trader, right, and you could have maybe a 4 or 5 point stop, then you can just catch your 3-to-1, get out, move on to your next trade. All right, so let's continue to look here. This is Kiwi dollar. So what are we doing right now? Okay, right now, trend was sideways, and then we got this move down and then back up. Okay, I'm not liking the price action right now. Okay, obviously momentum is shifting. It's shifting to the downside. It was up. Okay, how do we know? Come back here. And if we drew across these bottoms, just trying to make it easy for you guys to see all this stuff. Okay, so we know momentum was up, then it crossed below, retested, and now it's been going lower. All right, now this big green candle is starting to go red. Okay, starting to go red. So let's look here. Interesting. Not something I'm thrilled with. I mean, it could go, right? It could go, but it also, what it could do is get down into this area here and then just start doing this. Okay? Like it is over here. A lot of times, price will repeat. Okay, so it'll come back and then it'll start doing the same kind of thing that it was doing over here before it either goes up or down. All right, so we're starting to get some movement. The 10's crossing down, but right now the 20 is still above the 30, so we're not looking for anything high probability yet. All right, momentum did shift to the downside. We have had above average volume. We've actually had it all morning here. You can see this. But there's really no clear path right now on what may occur, right? Because we were trending down, then we went into this consolidation, this contracting range, we popped up, we're coming back down. We may just end up coming back down into this area and then start chopping again. So not something I'm super interested in right now. Okay, that's just me. All right, so let's move on to the next thing. What is it? New Zealand Kiwi yen. We'll let it come up. Good morning, 4 Points Trader. Good to see you. I don't know why it's taking so long to load. Let's just go to the next chart then. Wait, there we go. It came up. All right, so let's take a look. What's the bigger picture? Okay, bigger picture, we were trending down and then we switched and we were trending up. But now it looks like, what do we have? Looks like we have a double top right up here, right? Looks like we have a double top. This is on the 5 minute. See that? Came down, made our V. We came down. We took out the bottom of the V. We retested. You see how our moving averages, our EMAs, are starting to turn. So what do we know is that when we take this out, we're highly likely to do what? Get back to the origin of the move. The origin of the move is right here, and we're already there. Okay, we're already there. Can it keep going lower? Absolutely. We just know, okay, the origin of this direct move to the upside here, right? We know that once we take out the V, even if the V is shallow, like it's up here, once you take that out, you're still likely to get back down into here. And that's where it's at now. Now, because this is starting to get extended, you don't want to try to jump in it now. That's getting in late, right? That's what retail traders do. That's one of their biggest mistakes. They enter late and they exit late. They wait to see like a bunch of big red candles, and they're like, okay, I know it's down now. I'm getting in. About the time they get in, what happens? You get a pullback. And then they freak out and they sell, right? And then it starts down again. I knew it, I knew it. Well, why didn't you wait for the pullback? It's all about patience. It's all about patience, all right? If it would clear this wick, okay, this would be the next area you'd be looking at. I don't think it's going to give us enough. Let's look here. Yeah, it's only 4 pips. So I'm not interested in a 4 pip trade. Let's look back. Like, see how it went up? See how it moved up? Like this. And then it double topped. You see a double top and it comes back like this. Okay, that's usually a reversal sign. And look where, see this level right here? Where's my rectangle? Let me draw this, because I'll show you. Okay, it was very likely, see that? It was very likely to catch some resistance there. It tried twice, and it double topped there. If I spread this back out, made a deep V, came back down, took the bottom out. Now you don't have to wait, right? If you have some other signal, or if you're trading a strategy where once you double top, if you get some sort of a buy signal, somebody could enter up there. But right now we're talking about our trend trading strategy. All right. Now look already, not to say this won't change, but look how, excuse me, I know I was rocking my laptop there. I didn't mean to. Look how it's already catching some resistance, or excuse me, some support right here in this wick. Pushed it up. So we would be looking for either some consolidation sideways, okay, to let the 10 catch up, or even a pullback, right? Now, if it gets below here, then you're looking down here. You're looking for it to get down here. I'll draw that in for you. Actually, let me just do this. It'll be easier if I just put a line across. There you go. All right. So you would be looking, if it gets below here, here's your next area that you would look for some support. And at some point, if it keeps getting extended from this 10, we're going to see a pullback or a sideways consolidation, which we would call a base, right? A drop, base, drop, or a drop, base, rally. All right. Okay. Let's go on to the next one, GBP USD. We're working back through the reverse order today. Okay, strong trend to the upside. And look at this, okay? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, slightly lower low, but then we immediately made another higher high, higher low, higher high, lower low, equal high, higher high, higher low, higher high. Okay, so right now, until something changes, okay, it's still trending up, correct? Let's go back. Let's see if there's anything we need to worry about over here. Okay, nothing in the recent past. Let me pull this down a little bit for you, so we got some room to work. Okay, so now again, looks like it's catching a bounce, which would mean a what? Another higher low. If this ends up, if the next candle, which won't be for about another 2.5 minutes, continues on up, this would be another higher low, which tells us the trend is still going to the upside. Is the trend up? Yes, right? Check. Is price above trend? It's trying to get there. Right now, it's actually in there. So we're going to call that neutral or an X, either way. Okay, do we have momentum? Now here is where we do not. Okay, let me show. All right, so this is definitely going to be an X. Right? Even though price is going up, what do we have down here? We have momentum going down. Okay, we need to pay attention to that. That's why we have this checklist. That's an X, right? And that's a big X, and look what's happening right now. Okay, this could have been a precursor that this was about to turn, right? Okay, so that's a big X. Now we do have above average volume, but right now, the last two candles, it's been selling volume, right? So price is not above, X. Momentum is down, X. So that's 2 already. I mean, that's enough for me, but you know, it's usually 3 strikes you're out. We have above average volume. It looks like this is going to start to turn. See how it's already pivoting, right? So the trend has been up, but price is going to be down here. We were looking, based on everything else we've seen, we were looking for a long trade, but right now, well, again, this is why we look at this. This is why it's one of our factors. Here's what we're looking for. Which way is trend? Is price above or below? Where's the 10 in relationship to the 20 and the 30? Are the EMAs widening? Is momentum up or down? And do we have above average relative volume? Those are the things you're looking for. Look at this. Look at this big drop. This was our savior right here, right? This is why you go through the list. This is why you don't just jump in. You don't just say, okay, we're just pulling back. Like if you would have tried to enter right here, which would have been a huge no-no, right? Because price wasn't above. If you would have tried to enter right there, you probably would have already been stopped out. You know, depending, you probably would have put your stop right here under this candle. And look, you would have already been stopped out for no reason, right? Because this, even though price was moving up, this is why you look for negative divergence. This is what this is called. Price was going that direction, but momentum was going down. That's usually a good indication that at some point price is about to turn, okay, and change direction from where it was going. All right, so I just stayed on that for a second because I wanted everybody to be able to see that and how that saves you from making a bad decision. Okay, let's go to pound yen. You see, so those of you who've been with me all week, look, we really have not found a good trade yet, right? The first couple days, you know, we found I think that first day we found about 4. Then the next day we found several. Yesterday we even found a couple. So far today, we have not found a good trade, one where we want to say, yep, let's get into this, right? Okay, so here, this is pound yen. Let's scroll out. Okay, here we go again. The trend has been up, but look what's happening. We're getting a rollover up here. And I want to look immediately just because we had it on the last one and we have it here again. Look at this. Look at this. Did we have an indication? Yes, we did. So start right here. Look, price was still going up. But what was momentum doing? Going down. And now it's really dropping. Now it's really dropping. So we have our above average volume. We would wait to see. We're not interested right at this second. Okay, but if we get the 10 below the 20 below the 30, right? And then we get some sort of a pullback, then we're really interested because now it looks like we might be reversing. That's when we would be really interested. But at this exact second, right, we're not interested. So you move on. Euro USD. Okay. Here we are again. Now, you see why I drew the line. Remember, we started on this. We showed where there would have been a good trade a little bit earlier, right? And then what did I say about for an upside trade? Have to get above this line. You see how we just barely poked above and then it came back? So let's start looking at our factors again. Are we above trend? Okay, first of all, is trend up? Yes, it is. Is price above trend? Yes, it is. Okay, are we above average volume? Yes, we are. Okay, on average here, and this one's already up to the line. Is momentum up? This one right now. Okay, let's do it like this. This one, before this candle, let's see, where's this candle? Right here. Before this candle, you would have to say it was sideways. Let me remove that. If I can get, it would help if I grabbed the right tool, right? So it was sideways, okay, before this. So that's an X, right? Momentum is not in our favor yet. That's why you want to know this stuff. Are the 10, the 20, and the 30 widening? Okay, almost. You see how they were starting it? This was widening. Starts from tight and they get wider, and then they started closing. Now it looks like they're trying to widen again. Okay, I become interested or more interested in this trade if momentum breaks above here, price gets above here. And then, did we have targets? I can't remember. I can't remember what the targets were. Okay, but that's where, well, actually, let me go back and look at something here. Is this the one where we had to go way back? I think it is. All right, so I'm not going to do that right now. Let's scroll out. All right, so down here again, I'm only interested if I start to see momentum break back up through here. Because right through here, you see it's basically flat. It came down, it came up, and it's going back down again. But this is why I drew that line there. Okay? Remember before we left, this was the first one we looked at this morning. I said if we came back in here and then got some sort of a bounce back up, I wouldn't be interested unless we broke here and then all the other factors were involved. Now, what could be occurring? Okay, just know this. I'm not saying, you know, don't assume anything, but it's good to anticipate. What could occur here? We could double top, right? We might come down here, look, come back up here, and then what will we have formed? A V. Okay, and then if you start down, there's your classic double top. In that case, you'd start looking for indicators of, are we starting to move to the downside? Now, this is the real recent past. If you come back over here, I'm starting to get a bunch of lines on here, but I think you guys are following me. Okay, if you come back over here to right up here, we've been trending down. And that's what momentum is showing us, right? So you just got to keep all these things in your mind. So still, there's nothing to do on Euro USD. Okay, I'm not going to keep you guys on here a whole lot longer. Let's look at a couple more. How about Euro Pound or Pound Sterling? Ooh, look at this. There was a big move. I'll bet you that had to do with some kind of news or something, maybe. Let's take a bigger look. Okay, we've been trending down, so yeah, I'd almost guarantee you there was some sort of news that was either positive for the euro or negative for the pound that caused that big spike there. Because look at the average size candles until you see these two. These two are way bigger than the average size candles. Okay, now See this level? This is these are accurate support and resistance levels. I drew these in last night, and look at that. Look where it stopped, right at our resistance level. I took some time because I don't typically draw them in on forex myself. I draw them in on equities and on futures. But somebody asked me last night, they're like, well, how would you draw them in on forex? I said the same exact way. However, if you're trading the small time frames, like the 1, the 2, and the 3, I would draw them in based on the 15-minute. Now for equities and futures, I draw them in based on the 4-hour, but I'm typically trading the 30-minute and then sometimes the 15 or the 5. So I draw them in on the 4-hour for equities and for futures. But for forex, if you're going to be primarily scalping and primarily on the, say, the 1, 2, 3, and maybe the 5, I'd draw them in on the 15. So these were off of the 15-minute chart. These are support and resistance levels. And these were drawn in last night. Okay, so look at how they're being respected. Look at that, right to it. And it doesn't know I drew that in there, right? Price has no idea that I drew lines on a chart. Okay, but if you go watch my video on how to draw accurate support and resistance levels, it's only a little over 2 minutes long here on my YouTube channel. If you're going to do it for forex and you're primarily scalping the smaller time frames, follow the rules except replace the 4-hour with the 15-minute. Everything else would be exactly the same. That's how I drew these. All right, so we have been trending down. We have this big spike to the upside. Okay, we're well above right now. We're well above. So are we getting a pullback or are we getting exhaustion? Right? Because these are the two biggest candles on the screen, are we getting exhaustion? And is price just going to start to drop and go back into the downtrend that we were already in? We don't know, right? We don't know. Okay, now somebody may ask a question. Can you counter trend trade back to the moving averages? The answer is yes. It's just a different strategy. So if you're a counter trend trader, right, and you see something like this, a shooting star right off of a resistance level, and then you take out the bottom and you're a counter trend trader, you could try to trade it back to the moving averages. Let's see, what would that give you? It would give you about 8 pips, right? Okay, now where would your stop be? That's going to tell you whether or not it's a your stop's probably going to have to be right up here. I don't know if this is going to give you 2 to 1. Let's see, your stop would be up there, and then you would be entering right there. That's a 6 pip stop. So it's just a little bit over 1 to 1. We don't like 1 to 1, right? Remember why? Why don't we like 1 to 1? Because you have to win about 80 or 90% of the time to make any money. Because every time you lose, you're losing almost as much as you're winning. And then if you take out the spread and everything, you definitely are. So you have to win at a really, really high percentage. If you're 2 to 1 or 3 to 1, and you're only, like, say, a 50% trader, it's coin flip. I might win this trade, I might lose this trade. And every 10 trades, you win 5 and you lose 5. You're going to be coming out way ahead. Right? You don't have to be perfect. Now, you want to win more, right? So if you've got a great strategy that gives you an edge over the market and you just follow your rules and you win at 60 or 65%, which would be awesome, okay, now you're making even more money. Remember, I've talked about it before. Those of you who've watched a lot of my live streams, it only takes a small increase in your win rate to make a big increase in the amount of money that's going into your account. So if you're I think it's a 3 to 1 trader, and you just make a 10% increase in your win rate, so you went from 50 to 60, it makes a 40% difference in the amount of money that's going into your account. Okay? You guys understand that? I remember the very first time I ever figured that out, I was like, whoa, that's amazing. make a 10% increase in your win rate, and it's going to increase the amount of money going into your account by 40%. Well, that comes back to risk to reward, right? So now you're winning, right? On every 10 trades, you're winning in an additional trade. And then over, 100 trades, that's 10 more that you're winning at 3-to-1. Okay, so it increases your profit way bigger than just your win rate. Some people are like, well, what's 5%? What's 10%? If I increase my win rate by 5 or 10%, it's a huge deal. It's a big deal. All right, so we see price is still trying to make its way back here to the moving averages. Okay, we get this, again, 90-degree angle. Boom, straight up. When you see this, and these are the biggest candles on the screen, watch out. Okay, you're almost definitely going to get a pullback, if not total exhaustion. What we mean by total exhaustion, let's just say this was some sort of news event that we already seen. The prevailing trend is down. Okay, and some news event comes out and price spikes up this way. Well, as soon as the buyers decide, hey, we're ready to take our profits, what's going to happen? There's going to be total exhaustion then, because bears were already in control, and now they're really going to drive it down because the bulls just made their money and they're just stepping out of the way. And that's when you get total exhaustion. So you get this big move up, and then you'll see price go even lower than the move. Maybe not in big candles like that, but it'll just keep moving down, moving down, moving down. Price is always going to go where it was intended to go anyway, no matter what the news event is. News events are temporary. If the news event is negative and it's in line with a downtrend, it's just going to accelerate it even faster. But if you're already in a downtrend and the news is positive, you're going to get a temporary spike, and then price is going to go wherever it was going to go anyway. Because big money is going to make sure it goes that way. Hope everybody understands that. Let's go back and take a quick look at ES. So ES is making a recovery here. So here was our drop. You see that? We've actually already recovered. That's opening price level. Let me move this over. And I'll make it a little bit bigger for you. Okay, and then I'll draw this in. This is your classic V recovery. So there was our move down. There's your move back up. And there's your V-shaped recovery. Okay? Now, that doesn't happen all that often. It's very popular, and like I see people on Twitter all the time. You'll have some big move down. I'm looking for the V. I'm playing the V. All right. These only happen about 10 or 15% of the time. Okay. We got one here, right? Really, this is the move down. We haven't come all the way back up truly, because here's where the news came out. Let's see here. Maybe I can see if it'll let me activate that one. Yes. Okay, really, you don't have a V until you get back up here. Because this is when the news came out, and this was the move all the way down, and it's trying to make a V recovery. But what I'm telling you is, although it's popular, and you'll see a bunch of people on Twitter talking about it, they don't happen as often as people make you believe, right? They only happen about 10 or 15% of the time. A true V recovery, these will all be green candles up, okay? It's not a V recovery if you go up a couple or three and then you pull down and then you go up and then you pull down and then you eventually get back up there. That's not a V recovery. A V recovery is just what it sounds like. You're going to have a strong move down and a strong move right back up. Right? Now, if we get another green candle and it comes back up here, yeah, that's what it was. But it only happens about 10 or 15% of the time, so you shouldn't be banking on it. Right? Now, a decent play is to play whatever 50% of the move is. 50% of this total move down, that's going to happen about 70-75% of the time. Okay? That's one that you can play with higher odds, or you're trying to play a pullback here. Maybe you think, Okay, we're just pulling back to the moving averages. That's basically what we've done here and to opening price level. When you see that they're congruent or confluent with opening price level, that's a pretty high probability play. Okay, before we wrap it up, does anybody have any questions about anything? I'm going to come back over and see what we got going on. Okay, so there's our pullback almost to the 10. This is on euro pound, almost to the 10. Now we're trying to bounce. Okay, are we starting to get some upside momentum? Yes, we are. Okay, yes, we are. Is it above average volume? Just barely. Okay, but yes, that would be yes. Are we above the trend? Yes. Okay, that's also a yes. Are they widening? They're starting to. However, here's one that would be an X. You see the red? That's our 20. It's still below the 30. Okay, so one of our factors is the 10 is above the 20, and the 20 is above the 30, and then we want to see them starting to widen. They are starting to widen, but currently the 20 is below the 30. And we know that this level, watch this level right here, resistance, resistance, it didn't even get to it, resistance. So basically around 3 times it's already been resistance. And I would be careful, just make sure we don't come up here and double top, right? Create your V, double top, and then go lower and resume the trend. Just be careful. I'm just giving you things to look for, right? But if you do start to get some momentum, right? Momentum is up. Momentum is up. Volume has been good. If that remains and you remain above here and these things get to where it's 10, 20, 30, and they start to widen, okay, you might be able to get up to here. You might even be able to get up to here. Let's take our ruler. Always know what is my possibility. So if you maybe break above here, up to there is about 20, 21 pips. To here is only about 9 to 10. Okay, that's if you take it on a break of the bodies right here. So you could try to take a micro scalp. Again, if it breaks these bodies and you have all the other factors in your favor, if it's only a 9 to 10 pip possibility or likelihood, that means your stop can only be what? About 3. About 3 or 3.5. So if price breaks here, wherever you're looking at putting your stop, it needs to be around 3 or 3.5 if you're shooting for this as a take profit target. Hope that makes sense to everybody. That's how you calculate. Now, if you're a 2-to-1 trader, then that's fine, right? If you're going to make 9 pips on 4, that gives you 2-to-1, right? Because 2-to-1 would be 8. So you can figure that stuff out in your head really, really quick. Any other questions? I don't see any. We've had a great group today. I saw the numbers it got up and they're kind of fluctuating, people in and out, and that's how it always is, but we've had a really nice group today. If you need me for anything, come check us out in our room, simpletradinglife.com. Go there and click on the free chat room button. Come hang out with us. It's absolutely free. It doesn't cost you a thing. We got lots of content and lessons and videos and all the recordings of these live streams. And then we're in the chat room every day. We watch the market. We've been watching forex a lot more here lately because I know there's several people who are forex traders in our community. But not only that, if you're a newer trader or somebody who struggles a little bit and you're stifled, right? You're choked by the pattern day trading rule, the PDT rule, trading equities, open yourself a forex account. You can trade really small amounts and there's no PDT rule. And they trade 24 hours a day. That's what makes it awesome. You could take micro scalps, right? You could take 5 or 10 trades a day micro scalping, and you don't have to worry about PDT. And you can take really, really small trades. So I trade over here on a Wanda. Okay, this is my forex broker. They will let you take tiny. I mean, as small as you want. Now some brokers don't. Some brokers will say that like your minimum trade is $50 or $100 or whatever it is. Oando will let you take like super small trades. Okay, here, I'll just show you. I'm not going to actually put it on. Give me 1 second here. Let's just say, what are we on? US CAD, right? So let's just say we wanted to sell. So here's the order ticket. And remember, what you want to do is you want to predetermine, okay? For my take profit, I want 9 pips, and for my stop, I want 3. There's my 3 to 1, right? Now up here, units. You can be as big or as small as you want. Let's just say you want 100 units. It'll come over here and tell you if it's only 100 units, every pip is only going to pay you a penny. But they'll let you take that trade, right? They'll let you take that trade. So if it's 1,000 units on this particular currency pair, it's going to be different on each pair. It's 7 cents a pip, right? It's 7 cents a pip. If it's 10,000 units, it's 74 cents a pip. So you see how I'm going on and on and on. If you go up to 100,000, it's going to be 740. If you go up to 1 million, units, whatever, all right, that's how easy it is. They will let you trade as big or as small as you want. There are brokers that will say, okay, so like here, it's telling your trade value is $100, but that's not really what you're paying. Okay, it's not really what you're paying. But there you go, 1 pip, 1 cent. 1 pip, 7 cents. And it can be anywhere in between. Watch, I'll just put a random number in. 7,564. Well, you'd make 56 cents a pip, right? Anything you want, you can trade. So that's one of the reasons I highly recommend Forex if you're new or you're struggling or you're somebody who's stifled by the PDT rule, trading equities. Get yourself a Forex account. You can, again, open 24 hours a day from Sunday evening to Friday evening. And then also the currency pairs, right? So there's a market open somewhere around the world at all times. I'm going off memory, so don't hold me to all this, but like Australasia opens at like 7 p.m. at night. Europe opens at 3 a.m. United States currency market opens at 8 a.m. There's Germany. Germany has a currency market. I can't remember exactly when they open. And then the Japanese market. And they all are staggered. They're all staggered. So at some time around the world, there's a currency market open. That's why they trade 24 hours a day. But why that's important is at certain times of the day, so any of your pairs that are Kiwi or Aussie, AUD, or anything that's NZD, that's the Kiwi, when the Australasia market opens, I think it's 7 p.m. Eastern Standard Time, those pairs will typically be more volatile, right? When Europe opens, I don't even have to say it, right? The euro, anything that has the euro or the pound will be more active. Now, Europe, just so you know, that's the London market. It is the primary, and when I say primary, it is the biggest currency market in the world in terms of trading. Okay, more currency traders trade the London market, no matter where they live in the world, than any other market. Okay, and then I think it's the U.S. is second. Then it's, I think, Japan, and then it's Australasia, and I think Germany is like last. But when Europe opens, pretty much anything becomes more volatile. But really, the euro and the pound, anything that's associated with the euro and the pound will definitely be more volatile. And then there's there's overlap when Europe is still open and the U.S. opens at 8 o'clock. So for those next couple of hours, typically between like say 8 and 10 a.m., things can get volatile with almost any currency pair because you have both Europe and America, the New York market open at the same exact time, and they're the two biggest currency markets in the world. So hopefully that kind of registers with everybody. But I would highly recommend. I recommend Oanda, and I recommend getting a forex account if you're newer or you're struggling because of the PDT rule. Okay, folks, thank you for joining. Thank you so much. Please smash that like button. Give us those thumbs up. Subscribe to the channel. Turn on the notifications bell. And if you haven't already joined us in our room, go to simpletradinglife.com. Click on that free chat room button. Come join us and hang out with us. We'd love to have you, and we'll see you in the room. Bye-bye.